Street reacting to Tesla CEO Elon Musk's latest political gambit, the creation of the America Party, which did send the stock tumbling yesterday. Wedbush analyst Dan Ives today says the Tesla board must act and create ground rules for Musk. Joining us this morning is DVx Ventures CEO Jon McNeill, a former Tesla president and Lyft executive, as well as the current GM and Lululemon board member. John, it's great to have you back. Thanks for the time this morning.
You bet, Carl. Good to see you.
I want to get you on auto sales, and I want to talk tariffs and a bunch of stuff, but the street's really wrestling with how much Elon is willing to go forward on this side gambit, I guess, and what that does mean for his time spent at the company.
Yeah, I think one of the things that, a board would look at is what's happening on the competitive landscape. And one of the criticisms has been that Tesla lacks newness in their product lineup. And you just look across the numbers for the first half. GM doubled its EV sales and is growing at about 5 times the rate of the rest of the industry, largely due to the product lineup. And so I think one of the questions the board's got to, I think, be wrestling with is how do we get the product lineup modernized and fresh so that Tesla can compete?
Do you think at this point auto sales matter to Tesla when there's so much, at least in the actual price, built into the promise of robotics and robo-taxis?
I think auto sales matter in that they provide the cash flow to get to the future of robotics and robo-taxi. You could make the argument that Tesla has, $30+ billion on its balance sheet, so it doesn't have to care. But I think with the evaporation of greenhouse gas credits potentially, Tesla really does need to care because more than 100% of their earnings comes from those credits. So if those go away, you've got a company that's losing money and that may have negative cash flow. That can't last forever. And I think most of us agree that we're years away from robotics being meaningful in terms of the earnings of Tesla. And even Elon has said that 2030 is really an aim for the humanoid robots to really make a difference and begin to show an impact on Tesla's financials. So yeah, I do think auto sales matter, and they're going to need to matter for the next 5 to 10 years.
Do you think some of the damage, John, potentially from Elon's political involvement is it short term? Is it long term? I mean, how much of this is about brand damage when for so long Elon was sort of the driving force, no pun intended, for many reasons investors did pile into the stock?
It's a good question, Courtney, and I think maybe I'll answer that question just with data. About 80% of Tesla's sales historically have come from Democratic-leaning zip codes. And so when you alienate your core customer, it does become very, very difficult to recover and grow. Alongside the challenge of rebuilding a brand for that core target customer is very daunting.
John, you mentioned the Tesla's reliance on various credit programs, and obviously the push of policy right now has been on the consumer side to try and sway them back toward internal combustion engines, or at least remove any enhanced attraction to EVs. Is that something that the whole industry is going to be able to power through to sort of reset priorities? I know you have the window through GM, but also the conventional wisdom has been Tesla can survive better than the other EV competitors in that world, but is that true?
I think we've really made a push as an industry, and I can speak specifically for GM, to really reduce costs on the EV side and reach parity with combustion engine cars. And the best-selling EV for GM right now is the $29,000 Chevy Equinox. That's about $15,000 less than you can buy a Tesla Model Y for. So it is. I think that the narrative has been that Tesla can survive this tax credit going away. But quite frankly, they're not in the same cost and price position as some of the competition, and that's what's leading to a leakage in market share on their part.
Meanwhile, John, interesting piece on the tape this week regarding Waymo doing these road trips to the northeastern United States, Philly, New York City. That seems to be the next chapter here in trying to decide or figure out whether or not autonomous can work in dense urban environments. What's your thinking on that?
Well, I think first of all, it's exciting, Carl, because for those of us who live in the Northeast, we're constantly asked, when is autonomous happening? And the answer is, well, it's already happening. And it's happening in dense cities. Waymo started in the densest of environments in San Francisco, where you not only have city density, but you've got hills that really affect the visibility that the car can achieve. And it has handled those just with enormous success. And so I'm excited when I see that Waymo is now mapping in Philly and in Boston and New York. I think it's going to be a challenge from the regulator standpoint to get into those markets. But I quite frankly can't wait to hail a driverless ride hail in the Northeast cities.
Finally, of course, busy week on the tariff front. Is your general advice to people that if they are in the market for a new car, that the sooner the better to get a deal?
I think so. Like, we just don't know. There's still uncertainty, as we see kind of every week or every month with these tariffs. The car companies are scrambling and re-scrambling their plans each time a new announcement is made. But what that means for the consumer is the best priced cars are available now, and this gives another month of reprieve to some cars in the market. Not all cars, because the 25% tariff with Canada, et cetera, is still in play. But there is the best time to buy a car is now, because if the tariffs do go into effect as they're outlined today, that's going to have a significant impact on the cost of a lot of cars.
Yeah. Well, we did get a bit of a pull forward in the last few months. We'll see if that does continue as we continue to have this rolling window of implementation. John, great stuff as always. Please come back soon.
You bet. Good to see you, Carl.